All right, welcome back for the episode of Carnivore Trades. Today is Friday, February 3rd, 2023. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, excuse me, let's get into the markets here. Spiders down 1.2% currently as we're sitting here with about 10 minutes left in the trading day. And the triple Qs are down just under 2% here. Very interesting price action again. A bit of a mixed bag. So we've got to talk about Apple here. This is definitely gamma squeezing up here. Well, it is off the highs now, but it was gamma squeezing very sharply earlier and went right up into this pivot here. And I want to show you why, I'm definitely cautious on both sides here. So on one hand, we're kind of getting some sell signals here. And we talked about this possible evening star yesterday. At least I think I did. But either way, you have that big move after a good rally. Then you have a gap up, and then you get a reversal the next day. That has happened today, and that's an evening star. You leave that kind of island up there. I definitely remember saying island reversal yesterday, and that's possible we have that today. The other hand here, and what makes me a little cautious is, first of all, on Apple. I pointed this out on Twitter and earlier on YouTube Shorts here. You can see we went vertical, and this is how you know, first of all, that this is just a bear market rally. Again, I know some of you guys don't believe me, most of you guys do, but this is vertical move, no pullbacks. What do we have here? Vertical move, no pullbacks. The last time we had a 50-point decline here, we went up to this trend line, another 50-point decline to the bottom. So I can't rule it out that we could go. I definitely think we can get to 160, but 165, I think that could be the ultimate target. I might need to do a little bit of backing and filling to get there. But if we look over at the book map, we're right near that 160 level right now. And then there's orders up there around that 165 handle and a lot higher. I doubt those ever get filled. Those ones way up there, 180. And then on the downside, you have... sorry, I'm going the wrong way there. On the downside, we have all the way down to about 125, and then there's one down at 120 as well. So that would be kind of your lower end. But regardless, right now, if this was to continue higher, that's where I would look for it to go, because you've already done that, basically that measured move. You repeated that pattern once, so nothing to say it can't happen again. The other thing that makes me a little bit cautious about the selling is the Russell's holding up really well. So the Russell's still... down just 82 basis points. It's still down, but it's basically holding yesterday's low. And by the way, that's a fake print there on the Russell down to 194.35. The low of the day was 195, like 195.70. So maybe that gets there Monday and fills that gap. Logical pullback there for Russell would be down to 188. That's your breakout area. So that's where you look for it to go. This is parabolic, by the way. So it needs to come in anyway. But again, when I see the Russell holding up, it's generally not bearish. So that's just a little, side note there. And the real reason why I'm not so sure that this market's ready to really top yet is the volume's still pretty light. I would much rather see, okay, we have 76 million shares. The market's basically closing now in 7 minutes. I would much rather see well over 100 million shares. If you saw that, then I would say, okay, we've probably topped out and you can just go short with stop above the high. But right here, it is a little, we're not seeing that momentum of the downside. Also, very rare to get major reversals on a Friday. Usually you get it on the Thursday beforehand, and then usually pivot points, long or short, is going to be a Tuesday, Wednesday, or a Thursday type gig. And we're not really seeing that here today. Or obviously because it's Friday, but we are seeing a reversal. So either way, I would remain cautious until this market really gives us a sell signal, and they still can push this up here, but it is a good reversal here, and we'll give it that. By the way, take a look at the rising wedge. So we broke out. This is starting to look like a fake break here. So take a look at where the spiders are on that trend line. We'll look at the hourly, and you're basically right below that trend line right now. You're kind of holding that 20-hour moving average. You are holding the lows of the day here. Maybe they pop it up in the next 5 minutes just to save that trend line for right now. But come on, this has got to be on borrowed time here. If this breaks, it's going right down to this lower trend line, which seems to coincide with the 50-hour moving average. If that breaks, you're going to 400 pretty quickly. So that is what I would be looking for. It's probably going to happen next week. But who knows? They might hold this thing up a little bit longer. But I still stand by the thesis that I think we probably likely have a kind of an island reversal type setup. So an up move, maybe we chop around and then we break lower, or who knows, maybe we gap down Monday and we just break both of these trend lines. It's certainly possible. The market is ridiculously overbought here. We talked about the transports yesterday, and this is just ridiculous here. Short squeeze, euphoria, FOMO, whatever you want to call it, it checks all those boxes here. And we're starting to see some divergences from major sectors and major indicators here. First of all, though, I want to take a look at Amazon here. That was, that yesterday, come on, like that was such a red flag. It's gapping up, like what, 5% ahead of earnings. That's, come on. So look at that nice evening star reversal there as well, blowing out all of the gains from yesterday. Basically the same thing with Google. The Google is holding up a little bit better. It's basically trying to save that 200 moving average by the end of the day. But there's red flags everywhere here. We talked about Carvana yesterday, up like 300% on the year. Look at stocks like Shopify, Coinbase, Bed Bath & Beyond had a big, well, that's actually Best Buy, but Bed Bath & Beyond had a really big move a few weeks ago. I think the pot stocks even got a bid, Tilray getting a bid. Just to type dash for trash type movement. So either way, I want to talk about a few things though. And this is the big one here. ZT, so 2 year. That's got to change if you're a bull. I don't care what the spiders are doing. If this breaks down and starts to head lower, there's no bull thesis anymore, period. Because that means the Fed's job's not done. And if you ask me, if we break this trend line and they don't like save it immediately, if it's not a fake breakdown, it's probably going down to the lows and maybe making new lows. So be aware of that. I say this all the time, but guess what? Bonds are calling BS on the rally right now. Let's look at the 30-year. This is holding up. It still has an inside bar. It's hanging in there, but starting to come in a little bit. So bonds not looking too good. 10-year, same thing. Nice outside day. That is below that green bar low. It already closed below the green bar low last week, or I should say on Monday. But that is back below that and, getting rejected at the 200 moving average again. So bonds are saying something. It's a little bit of a mixed bag here too, because if you look at crude's selling off. So kind of a mixed bag here, but I'm always going to trust the bond market before anything else here. But that is a little bit of a divergence, obviously. Another thing here, telling you guys, dollar has bottomed. That is a power move there. And by the way, one of my clients I do a little extra work for him. We took a short on the Aussie dollar. Beautiful level here, 618, pivot high, red bars above that, overbought, extended, and he's in the money, $1,800 per contract, engulfing reversal on the weekly. So big gains there. If that's something you're interested in, doing like some one-on-one work, definitely recommend that. By the way, the euro here, rising wedge, bang, nice breakdown here with follow through to the downside. We usually talk about gold later, but monster move. What have I been telling you guys? Trail your stop. So trail your stop on this. You should have stopped out by now if you were long this. That 20 moving average has been absolutely violated today. And you basically wiped out almost all of January's gains with 2 days. So big move there. Take a look at the weekly. Big rejection, trend line, red bar. I've been telling you guys, look, it can always go a little bit higher here. Nothing to say it can't, but this is extended. It's overbought. It's tired. You don't want to be long up here unless you're, like I said, you're trailing a runner position. Some of you guys are short and took my advice. Congratulations, you made some money on this. Made some really good money, and this is probably going to go down to 18. It might have some support here at 1860, 1875. It's basically right in there. But I told you guys 2 days ago, it would go to 1975. We're down 100 points from that in 2 days. So 1975 and 20 cents, not bad. But this will ultimately, your better buy level here is right around 1820. But yeah, nice reversal. And again, dollar has bottomed. So I don't really think the stock market really cares right now, because we're just seeing right now, what we're seeing is positioning. Too many people were short, and that's why we're getting this squeeze. And now you're getting retail to come in as there's the closing bell there. So we closed, just below that trend line. So possible fake breakout there for the spiders. But at the same time, I want to preface that and say, look, Apple, I mean, they could flag this and they could move it up. Nothing would surprise me right here. And whenever you gap above a moving average like that and you power up, they could always add more upside here. But this is way overbought right now. So just a little bit of caution here. But we are seeing, like I said, some cracks in the armor here. We talked about financials yesterday. XLF ain't doing jack shit, guys. That's not a good sign. I would prefer to see XLF up with the market here. And we talked about that kind of divergence. I mentioned this yesterday, but back in December when we broke that Powell candle, I think the next shoe to drop might be financial related, might be credit related. So we'll see what we get. Outside of that, let's get over here. And I know I kind of went off course here today a little bit, but that's kind of how the day went. So Q's finishing down 1.76. Again, just looking just like the spiders here, but they were having kind of a higher low, mostly thanks to Apple. If you look at the heat map, it's really kind of a mixed day here. If Apple wasn't up, 2.5%, this market would be bright red. So Apple hanging in there, and that's why the Qs were able to put in kind of that little higher low, I think, throughout the day, as they make obviously much more of a weighting than in the S&P. But either way, gap up, and you closed below. Looks like, we closed below yesterday's low. So not good. It probably wants to come back down and test 300. There's a gap fill, obviously. Then you've got some pivots here. There's the trend line, 200 moving average, 20 moving average. That's probably where it wants to go in the near term. But again, we still need to see follow through, and I need to see volume. So that's really going to be what kind of confirms it to me. And I would say a lot more. I would feel a lot better about it if the Russell was down a lot more and just wiped out yesterday's gain. But it really didn't do that. So when I see small caps outperforming, generally there's still a little bit of risk on in the market. However, this is parabolic, so this can reverse at any time here. There's a ton of resistance up here, by the way, at this gap fill. There's a ton of bags up there that was never tested, and then you have the red bar, another red bar, and another red bar above that. So Russell really long in the tooth here. Either way, Dow just can't seem to get through this wedge here. It's trying. We'll see what it does here. Again, 345 is still your upside if it can break out. SMH here, Semiconductors, again, kind of an evening star type setup here, gap up and then a gap down below the lows. It's still holding up okay. You held this white trend line. Obviously going back to, this isn't an exact level, but it's, it's good. It held up well today. We filled the gap. If this comes down, you don't want to close below this green bar. If that happens, we're probably going to, I don't have any off the top of my head, probably about 220. That's probably where you're going to want to go, maybe 223. But yeah, that green bar low there is your breakout bar, so you don't want to see that go. But, they're holding up for now, so we'll give them the benefit of the doubt. Let's look at AMD. I haven't looked at this yet. So AMD, having an inside candle, it's holding up okay. NVIDIA, it held yesterday's lows. So Semi's holding up a little bit well, and that's another kind of point for the bulls there, I suppose. IGV, this was weak all day today, so cloud software really outperformed the last 2 days, was up nicely, and not only closed below yesterday's low, but this is, it closed below where it opened today, whereas pretty much everything else on my screen closed above where it opened, right? So we had it open, it was still red, but there's the Qs. Same thing on the semis there. So they opened, rallied, came back in, but IGV was a little bit on the softer side for most of the day. So we'll make note of that. Again, your obvious level here is obviously 290, 200, 20 moving average right in that area. You have the green bar low there. If this goes, then you're probably headed back down to about 265. So just be aware of that. With the IGV transports, possible blow off top here, right up into resistance. 3-bar surge. There is, just a pause candle, nothing crazy today. We'll see what it does here. If this consolidates, maybe it puts in a failed bull flag. I would think that's probably likely. I don't see how much more upside is really in it, but obviously we'll respect the move here for the time being. All right, we already mentioned interest rates here, so I don't need to go over that again. Homebuilders here came in with everything else closed below yesterday's low. We'll see if that's a fake breakout, if it breaks this trend line. If it does, we're headed back to 67. Some support at 66, then your levels are pretty, right, set up right there. Pretty easy to see them all. ITB, same thing. Parabolic needs to come in. VNQ also on the weaker side here today. That closed below where it opened. And below yesterday's low, but it did hold this kind of 200 moving average. So for now, maybe it can hold up a little bit longer, but again, overbought. just like everything else. XLF, we already touched on a little bit here. We almost got to that 37 handle, 36.90 here today. Again, red. It's just it has not performed with the rest of the market here. Broker dealers did manage to scratch out a gain here today, although this is overbought and extended like a lot of other things again. On to crude here. I already touched on this a little bit, but at least I think I did. I know I did for the members, but either way, I did. This is what I get for doing things out of order. But crude here down pretty nicely. So down 3.5. So a little bit of, I did talk about this. Okay, so a little bit of a divergence from bonds here. But again, weekly inside bar playing out. This is why I said a few weeks ago, avoid that inverse head and shoulders look. Right there. We close below the neckline. That's failed. And you have a more dominant weekly inside bar starting to play out. This should get to the 200 moving average, but don't buy it there. That's not going to be good support because we've already come down and bear flagged above it. You might get a couple day bounce here. I can't rule that out, but I think this probably wants to get down to about 60 here in the near term, or maybe not near, medium term, we'll call it. But yeah, nice dump there on crude, and guess what? Closed below that green bar low as well, it looks like. Let's see the exact, 73.47. We're at 73.20 right now. So crude's in trouble here, and it does look like it wants to go lower. That's why I've been maintaining a bear bias on this really for the last several months here. Anyways, over to XLE. So XLE lower. This did have a decent day, though. It was only down 16 cents. So kind of hanging in there, holding the 100 moving average. It does look like we might be seeing a little bit of rotation, though. Some money starting to come out of these energy stocks finally. But again, they're holding up and, really until proven otherwise. So we'll give them the upside bias. XOP, same thing. OIH, same thing. OIH just manages to scratch out a gain even when the market's down. But hey, it's holding up here. The bigger time frame is still really good on this, but I still think this can get down to that 250 level if the market goes where I think it wants to go. Nat gas, guess what? Nat gas was down today. I know it's hard to believe, right? It actually put in a little bit of a tail there at the low. This will bottom when it bottoms. They're dropping this to rally it back up. This will get back to $5 in probably the next couple of months, and next year wouldn't surprise me if it's making new highs. I know that seems insane to say right now, but this is how commodity super cycles work. They take them down, they get everybody out, and then somebody with a lot of money buys up physical very cheap. So that's what I think is going on with nat gas right now. Historically, it does sell off into February, and then we get a rally into June, July. So I think that's setting up perfectly right now. But yeah, nat gas lower, I know, big surprise. It's red basically every day here. Dollar index, we already mentioned here, this is bottomed. Take a look at the weekly. Good looking candle there. Monthly, good looking candle. There's a lot of dollar bears calling for the dollar demise, and that is, by the way, I talked to you guys about this earlier this week. There's your breakout level, back test, beautiful setup. So love that right there. Bullish dollar right now. Also bearish gold, which you already talked about. Silver, what have I been saying for the last month or so? I'm probably going to put in a rolling top. Look at that weekly, guys. Rolling top right to the penny there, essentially. So this should get down into these moving averages right around 21, call it 21.75. 50 MA, 20 MA, below that is the 200 at 21.43. Wiped out in one day, we wiped out over a month, basically 2 months of trading on silver futures. So this is why I've been saying I don't really like it long here. I know this is a good pattern. It just, sometimes you just know your intuition kicks in. But, if this weekly pattern, and I mentioned this earlier, if it had gone up like this and it had gone straight instead of kind of rolling like that, I would like it a lot more, but I'd never like when you have that rolling kind of look, especially after a big move and you're already kind of overbought. Those consolidations tend to fail, and obviously that has happened now. Let's look at the weekly there. Yeah, big sell-off there. So silver coming in. This will be a buy, though, in the future, just not right now. Platinum, same thing, big dump there, all the way down to 980. I said 975. We got pretty close there. It probably will get there on Monday. This has got some momentum to the downside, though. Lots of volume there, so this might want to go a little bit lower. I would avoid platinum now. I will be a buyer in the future, though. And copper here. Again, I really wish it got to that 426 area. I think I told you guys that's where I wanted to take it as a short. But continuing to head lower, beautiful. That topping tail is held up perfectly. I love that. Nice sell on the weekly. This should get to $4, and then of course 395, as I've mentioned many times over the last week or two. Bitcoin here, basically just down 2%. Nothing crazy here. Again, nothing's changed. Still should have upside bias at 25,000 if the market can hold up. If the market doesn't hold up, then everything goes down. So just be aware of that moving forward. Lastly, spiders here. Again, down 1%. Watch this into Monday, this rising wedge. If this starts to fall, you'll have some support here at the 50-hour. So 408, that was your previous breakout. If that goes, we're going to go down pretty quickly, probably to 400. So then we'll kind of reevaluate it from there. But again, not a whole lot of volume here in the markets. So, if the volume was heavier, I would have jumped in hard on the short side today, but it just wasn't there. And the Russell still held up well, and it actually closed above the low pivot of the day, like well above it. Whereas, the spiders, well, they did close above the low pivot, but they did at least breach it intraday, whereas the Russell and the NASDAQ made higher highs. So that does indicate there's a little bit of strength left here in the market. Anyways, guys, going to wrap it up here. You guys have a great weekend. Come find me on carnivoretrades.com. Talk to you guys all next week.